Welcome to Bears in Exile. Today is July 23rd, and this is the weekend market overview. We'll be looking at the Dow, SPX, VIX, XOI, TNA, UUP, FXE, GLD, and SLV. Alrighty then. Here we are with the Dow. Had a interesting day on Friday. We did end up with a hammery looking structure. Red candle. We can see that it went up twice now to the previous upper price consensus for the previous month, and has backed away twice now. And so we know that there is strong resistance there. That it hasn't been able to get through it twice is not a great sign, but if it's able to test it a third time, then chances are better that it will be able to break it. Beyond that, what do we have? Well, looking at Guppy, we can see we have extreme separation of the short-term moving averages, indicating a bubble. We do not have a downtick. We do have the hammery looking structure. Beyond that, CCI is ticking down, stochastic is ticking down, RSI is ticking down, MACD is still ticking up. We have a slight increase on the MACD histogram. So, mixed bag. Beyond that, if we look at the 60-minute, looking for our divergences, we don't have one on CCI. We do have one on the stochastic, although it is trying to resolve itself. We do have the RSI sloping down, and we do have the divergence on the MACD, which is also trying to resolve itself. Notice that we have a bearish crossover on the MACD, and everything except for the RSI is pointing down. So, not too much to say, really. I am looking at the bubbly short-term moving average and the hammer, as well as the most of the secondaries turning down. So are we going to have any kind of real retracement before trying a third time to break that resistance? It's anyone's guess, and most likely it'll be news driven. So SPX is going to be essentially the same thing, except for instead of a hammery looking structure, you have a very pretty hammer. And of course it did not get as high as the Dow, but we can see that we have excessive separation in the short-term moving averages. We don't have three of the secondaries clicking down. The CCI and the stochastic is still ticking up. RSI is the one still clicking down. And the MACD and the histogram are the same as on the Dow, clicking up. And we're going to have the exact same possible divergences here, stochastic. And notice that the stochastic is not trying to resolve its divergence at the moment. So this one actually still has a little ways to go. Perhaps that's because we had 43.25 down on the Dow today, and was not reflected in the SPX. So still divergence in the MACD histogram, and bearish cross on the 60-minute. Now on the VIX, we have an inverse hammer. We can see the short-term moving average is trying to cross over through the really weak bar, and this is not a pretty cross as of yet. The CCI is still ticking down, stochastic very low, RSI pointing up, still have the bearish cross on the MACD histogram ticking down. 60-minute, we still have divergence in the stochastic. We still have divergence in the RSI. We still have divergence in the MACD. So, is this going to pop up? Well, it's way far away from the newly bearish bar on the 60-minute. And, we do have a little bit of an uptick here. Whether or not that's going to go up and test the bar is anyone's guess at this moment. But certainly the daily is a mixed bag, and we do have that candle. So Monday will be interesting. Oil, XOI, hammer, hanging man, whatever you want to call it. CCI is pretty high. Stochastic slight tick down. RSI going down. MACD histogram ticking up. MACD up. So another mixed bag with another possible reversal candle. Okay, so very mixed bag so far. TNA. Aha, another hammer and or hanging man, whatever you want to call it. You can see that we have a resistance zone here that matches up with the major price consensus of the previous month. It has not been able to break it. It has touched it 3 times. So kind of surprising that it couldn't do it on the 3rd go, because normally that's the magic number. We can see that the CCI is relatively neutral. Stochastic is just above the 80. RSI is down to the 50. And the MACD and the MACD histogram are still trying to figure out what to go and do with themselves. 60-minute, we do not have a divergence in the CCI. We do not have a divergence in the stochastic. The RSI is slanting down. We do have divergence in the MACD histogram. So really 1.5 out of 4. Too bad we don't have a clearer signal with more divergences, but we simply don't. UUP. Ooh. Almost a gravestone doji. And look at these short-term moving averages. Look at that separation. That is not attractive. It just burst through the bar, so this is normal. And typically when you have this, after you break through the bar, you're supposed to go back and test it. You know, whether or not it fails or succeeds to get through it again. But you know, you can see that many times. Comes up to the bar, bounces back, and tries to continue on its way. Goes through the bar, comes back, fails. Goes through the bar, comes back, fails. And it's doing that again. So, is it going to come back up? Well, that's anyone's guess. You can see that the CCI is ticking up. The stochastic is way low. RSI is neutral, and we have a bearish cross on the MACD histogram ticking down. It's close to the lower Bollinger Band, but yet another mixed picture. Not too helpful. FXC, the euro, hammer. Ugh. And notice, even though that the bar is a flat line, we did not get full crossover and separation prior to entering the bar. We only have one of the moving averages getting through the bar. This is a very weak, ugly penetration of the flat line. If it was a complete bar, that would really be a warning sign. But oh, we have a hammer. CCI almost above 100, stochastic way above 80, RSI below 50 through all of this. It's kind of interesting. New bullish cross on the MACD histogram ticking up. And going on to gold. Spinning top. Notice that we do have extreme separation in the short-term moving averages. It has had 2 downticks. They have not been met for a bubble correction. So this is bubbly. Long-term moving average is very strong. CCI ticking up, stochastic ticking up, RSI ticking up, and the histogram ticking down, which is kind of interesting, and actually flattening out now. So it is very high, and we do have an indecision candle. We'll have to see what happens, but we do have a bubble here. SLV. Not really a candle of note. we do have excessive separation in the short-term moving averages. CCI clicking up, stochastic clicking up, RSI very high, and MACD leveling out. And then we're going to add one other one, which is very interesting to me. GE. Now, GE in earnings season normally leads the market, and what it does sets the tone and the direction atypically for the Dow. So today they released their earnings right at the open. They had their little conference call, bumped up really nice and just fell. And a big red candle. Beyond that, this is a dark cloud cover pattern, so which is bearish. You can see that the CCI is leveling out at 100. Stochastic is ticking down. RSI now getting below the 50. We still have a bullish cross on the MACD, and the MACD histogram is clicking up. And we have divergence on the stochastic, which is trying to fix itself right now, so actually maybe we won't count that. RSI is slanting down, price was going up, and same thing with the MACD histogram, and we have a MACD bearish cross. So for one day look, GE does not look pretty. Something to be aware of. So even though we have mixed signals, what should we take away from all of this? Well, the signals are mixed. The biggest thing that I really take away is the possible reversal candle, which has yet to be confirmed. Absolutely has yet to be confirmed. But if we look through different things, see if I can find a good example. Here's Bank of America, hammery looking candle. Best Buy, hammery looking candle. Citi, it's actually a doji star, which is very similar to hammer. Not a good sign. CNO, spinning top. What's some other things out here? Oh, Cree actually had a nice day. Cisco, hammer. FAS, hammer. FAZ, yeah, inverse hammer. What is this? Herbalife. What is this doing on here? Spinning top. Casino stocks are doing really good right now. Not a hammer. Nvidia, hammer. Riverbed. Almost an inverse hammer. That's actually nice. Look at that drop though. That's insane. SGI, spinning top. Wells Fargo, almost a hammer. XLF, hammer. So all I want to point out is a whole bunch of charts, not all of them of course. Maybe it's not representative of the market as a whole, but of the things that I watch, hammer, 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 hammer. I would be kind of nervous about Monday, but it's a weekend and we'll have news. Who knows? So good luck to everybody, and this mixed bag we'll open it up and find out what it is soon enough. Have a nice weekend. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.